Hi, everyone. Welcome to this live coverage. As usual, we are here to share with you the coverage of a big event, hopefully. We are here with Yohay from Forex Crunch. How are you, Yohay?
Hi,
And
Valeria.
Mauricio,
I'm doing great. And you? So,
all fighting here also. Mauricio is in the background, giving us support. And while we are waiting for the second revision of the first quarter US GDP, usually not a big market mover because it lacks the surprise factor. We already had a headline last month, and it's not even a confirmation, which we will get next month. Sorry. So maybe of the three versions, the GDP has the less relevant, but anyway, still interesting. And today, combined with durable goods orders, right, Yohai?
yeah, so we have Q1, revision Q1 GDP, and this durables good orders is already for Q2. And after a weak Q1, we're expecting a rebound in Q2. At least the Fed is expecting one. I'm much less optimistic. So we'll get a revision of Q1 and a fresh look into Q2.
Yeah, it seems we are expecting today a slight upward revision to zero point 0.9 from previous or initial estimates of zero point 0.7. But I was checking the durable good orders and we're expecting a decline there also. So not much big news expected if the numbers are indeed better than those forecasted, then the dollar could get some support. But I'm not sure if it will be long lasting, because tepid data coming from the US has been hitting us for long. So it will take more than one positive or two positive reports to change the negative sentiment we have across the board towards the greenback.
Yeah, and in general, when we have more than one data point released, the impact will be bigger if all data points go in one direction. So if GDP misses and also durable goods orders miss, then the dollar could suffer much more than if we have sort of mixed data. Um, let's see.
Yeah, indeed. Well,
What do you think of the Fed meeting minutes this week? What's your takeaway from that?
well, they change a bit the wording, and I guess that's what affects most market. But the fact is that I don't think they add nothing new, because the add of being prudent on data, we already knew that the Fed was data dependent, right? But somehow they express a bit of concern about the weak data I was commenting, right? So the Fed is a bit more concerned. But if they don't pull the trigger in June, I believe that the market's reaction, particularly stocks, could be worse than what the Fed wants, and therefore they will have to keep markets quiet.
Yeah. So what I'm sharing now is the probability of rate hike according to bond markets. And it shows still 83% chance of a rate hike in June. And I think it's a bit too optimistic. Again, as you said, Valeria, data has been subdued. And the Fed, they said they might raise rates again relatively soon, but they may want to wait for more data. I think they gave a bit for everyone. And what was clear to me is that there was no smoking gun for a rate hike in June. So I think the chances are much lower than 83%.
Okay, we have a question here. Someone says, "Why do you fall so much in the latest hour?" Well, so much. It's 25 pips lower. That's not so much. And the pair is trading in range. I guess it's some position adjustment ahead of the release, but the euro has been showing pretty little direction over this past week. We have seen it stuck around 112 for most of it. And therefore, well, it's waiting for news, but I don't see it easing, to be honest. Not yet. We have an immediate support around 1160. And if we get that level taken, then the pair can fall toward this early low around 1080. A couple of the past week low on Thursday, I do believe. last week. So this current movement is really not relevant ahead of the big news. It's just a retracement. Uh, what I'm noticing in here in the euro is that it's having a hard time to beat the highs. Maybe that's a bit discouraging for bulls, but if today US Nada disappoints, maybe we see the pair return into that level, right? What's your take, Yohay?
Yeah, I think euro dollar is undergoing some kind of consolidation now in this range. Support 111.60, resistance maybe, well, the cycle high of 112.60, 112.66. All in all, the trend since the beginning of the year is to the upside. We had it, well, according to what I see, trading in a channel, showing us higher lows and higher highs, and eventually even breaking above this channel. So now we're seeing a bit of consolidation. So once again, it's boring and no volatility. But for me, the trend remains to the upside. Growth is stronger in the Eurozone than in the US. Politics looks more stable in the Eurozone than in the US. And monetary policy, the US is ahead of the Eurozone for sure. But the direction is changing. So I think there's a lower chance of rate hike in June. And of course, with higher inflation in Europe, a higher chance that the ECB will begin talking about tapering. So for me, the trend remains to the upside. So
Draghi refuses to discuss tapering.
yeah, but his colleagues are beginning to talk about it. Again, we had core inflation at the highest level since 2013. And next week, we'll get fresh data from the Eurozone. I think will be, well, they'll have to begin talking about the end of QE. Yeah.
Yeah. Okay, we have another question here. It says, so we are trading the GDP, correct? In fact, it's not correct. We are trading both GDP and durable goods orders. As I was saying, if unless we have strong deviation from what the market is expecting, the GDP release being the second one, it's usually not a big market mover. You know, it's usually it generally comes in line with the first estimate. Of course, it can change. So my take is the market may pay a bit more attention to durable goods orders. But anyway, both are relevant. Both are samely strong today. And I do believe that the one that we wait more in the market is the one with the strongest deviation, you know? What do you say, Yohay?
Yeah, I certainly agree. First release is always the most important one. And now it's second releases data for Q1. We're at the middle of the second half of Q2. So durable goods orders for April also is important. But again, I think if we have a big surprise now in GDP, then markets will ignore durable goods orders. So yeah.
We are there, less than 1 minute to go. Remember, guys, we have a bit of delay. So you will see the reaction first in charts and the number in the calendar. And with a bit of delay, we will comment so far.
Yeah, so it's almost there.
Yeah.
Revised up to 1.2. So good news from the US. Upwards revision, 1.2% GDP.
Okay, that's a good number.
Durable goods orders drop 0.7.
Okay, that's also we're expecting corn, right?
Yeah, with core orders, they fall 0.4, so it's worse than expected.
Okay.
So let's see the market reaction. I think so far we're seeing a stronger dollar, right?
Yeah, a bit of a stronger dollar.
Yeah, so euro dollar is, well, 15 pips lower.
Yeah.
Pound dollar, not so much. Maybe 10 pips.
Yeah, pound dollar has been weighed by the polls about that show that Theresa Party is losing ground, but barely react now to the news. The Japanese yen bounced a bit, some 20 pips higher after the news.
Yeah, 10, 15 pips.
Mixed outcome. really mixed because we had an upward revision in GDP that was better than expected. 1.2. Durable goods orders in the month fell by less than expected, although the core number was worse than expected. Anyway, both well below March numbers, which were revised higher already ahead of its release. The dollar barely gaining some pace across the board with the news. Remember? Yeah. We have a strong support. Okay, go. Sorry.
No, sorry.
The euro has a strong support around 1160, at least the first one for me. So maybe below that level we can see further slide, but not expecting nothing huge after this.
Yeah, I don't expect the dollar to go too far up because core durable goods orders missed expectations, and even with 1.2, it's still a quarter over quarter only 0.3. It's still poor growth, so it's always good to have a figure that comes out better than expected, but I don't think it's good enough. Again, it doesn't give the data-dependent Fed the data it needs to raise rates.
At least the news saying that European equities had their early decline and are trying to erase some of their huge losses. US indexes are poised to open slightly lower, barely. Stocks are being weighed by the energy sector, with oil plummeting yesterday after the OPEC sound way too optimistic of extending their deal for 9 months, something that the market had already priced in and largely anticipated.
Yeah, so it was priced in, and also another thing is that there were exceptions for Nigeria and Libya, the same thing like in the past agreements, but since then, political situation in both countries has improved, and oil production has gone up. So maybe there wasn't such a justification for another exemption for both countries. So that's why. But it's mostly by the reversal of the fact, I guess. No.
Yeah. The dollar depreciation is struggling with 11.20. Still quite subdued. Inflation was better than expected in Japan. We are far away from the 2% target, the Bank of Japan's target. But core inflation in Japan rose by 0.3%, the highest in over 2 years. So, in here we have 30% inflation yearly.
I don't know. They'll have to. Printing money didn't work for them. Maybe they should try to bring more people in, or just raise taxes if they really want inflation, because printing so much money doesn't go anywhere.
Yeah, did not work much for anyone, in fact.
Remember a few years ago, people were talking about hyperinflation. Never happened.
Yeah, I was thinking that all central bankers says, well, the measures are working after, I don't know, 5-10 years of applying easing, right? And we know that there are so many other factors helping the economies rather than the massive printing we have seen since 2008, 2009. But hey, who I am. I'm not a central bank. Yeah. Anyway, okay, wide limited reaction here that are holds around above 1180 so far. Remember the 1160 is a more relevant support short term. The pound keeps on falling, but it's that soft weakness. And If you take a look at big time frames, now give me a second. I will bring up my pound chart. Here we are. Okay, ever since Theresa May announced the Brexit, 28.30 has been the low for the past weeks, and this 27.60 or so is the lowest after that such rally. So my take is that if the pair breaks sharply below this 28.30 area, there's little in the way down to that 27.60 price zone. And that will put the pound at risk, right? Yeah, of falling further, of course. We have been in this range for over 3 weeks already, and since we are going lower.
Yeah, the pound we had the horrific terror attack
earlier this week in Manchester. We didn't really see a market reaction to that, but the campaigning was suspended by all the parties in the UK. And now that campaigning for the elections in 2 weeks is picking up, we had recent polls, and they show a tightening of the race between Labour and the Conservatives. Markets usually prefer the Conservatives, especially in this case when Labour is a bit more left-wing than usual. And so that's one of the causes for worry. You also had a downgrade of UK GDP yesterday from 0.3 to 0.2. So with this revision, with these both revisions now, US growth is faster than UK growth. It was just the opposite before the revisions.
There we go with pound 28.20, but the dollar Japanese yen retreat from that high. Okay. The pound is the weakest today, not among. It's the weakest, and therefore a slightly positive number in the US is feeling the decline. The euro is strong. The yen is strong, therefore slides against the greenback of such currencies are more limited. Gold is breaking higher, so somehow that's anticipating little room for dollar gains, right? Okay, the US calendar has one more report ahead, the Michigan Consumer Sentiment Index for May. Usually affects the market at the end of the day, at the end of the week. So we're waiting for a 97.5 from previous 97.7. So if that comes better than expected, the dollar may get some more love, but limited, as Yohay said, right?
Yeah. Markets are a bit sleepy once again.
Yeah, it has been a sort of sleepy week, despite we have a lot of headlines. Yes, the market was hoping for another week of scandal headlines. Okay, the pound keeps falling. Commodity-related currencies, on the other hand, are grabbing some pace, limited.
Yeah. I think it's the reaction of the pound is stronger than in other currencies. So it's the movements in the pound have been stronger all day.
Yeah.
In comparison to other currencies. So we're seeing an extension of the fall.
Yeah, the dollar grabs momentum when its rival is weaker. This days, but not much more than that. Anyway, pressure in 28.10, break below 30 is favoring the move. Remember, we have room to go down to the 27, 60 area. So
let's see if
the euro is also pressuring its low.
yeah, low for the day, but still above support there at 111.60. The pound, it's the lowest since, well, a few days ago, not that long ago, but no, the pound is at its lowest since late April.
3 weeks. Yes.
Yeah.
A month. April 26, yeah.
Yeah, so a full month, yeah.
Yeah.
Well, euro dollar is just at the bottom of the range of this week, more or less. So
yeah, 20 pips away. Okay. I didn't check out yields today because the Deutsche Exchange is depending 99% on yields lately.
yeah, basically ignoring US data. Hey, Japanese data.
Yeah, okay, the 10-year yield stands at 2.23%. Yesterday closed around 2.26, 2.27, if I'm not wrong. So that's what keeping the upside limited in the Deutsche Exchange. Yields are the main model of all Shen crosses.
Yeah.
Such a big battle going on around the euro trying to move lower, but didn't.
Yeah, let's see if I get more data.
All in all, regarding the US economy, we got better than expected data for Q1 with the GDP upgrade, but disappointing reads in terms of investment, at least from the core durable goods orders for Q2, for April at least. So maybe Q1 was not terrible, but Q2 is not going to see a big rebound. It's the same mediocre, steady, slow, frustrating, boring growth in the US. I don't see here a smoking gun for the Fed to raise rates.
No, there's not. And there's a question if we can talk about GDP, sorry, in the long term. Well, it's a bit risky ahead of elections, talking about what may or may not happen with pound. Elections are a big market mover. Take a look what happened in the US. We were all forecasting a chaos if Trump won. The euro fell. The dollar fell, sorry, sharply with the release, and then gain even more fast and drive the euro to fresh year lows. So it's how things develop around elections, which will determine if the pound will be able to keep on rallying or not. To be honest, for me, particularly me, the Brexit is a huge stone in the way, right? Bigger than elections itself. the rising inflationary pressures with the countries having, the trade problems it will have with Brexit and so on. So I'm honestly, what I'm seeing here, take a look at my weekly chart, bearish. What we are seeing right now, it's maybe an upward correction, the latest rally, but failure around 130 has become quite significant right now. And if somehow we close the week below that 2760 region, I was mentioning a few minutes ago, I do believe that the risk turns back towards downside, towards 25 or so. Long term, today, I can't see the pound strengthening. Today, we can see some spikes on the side of the board, but the long, wider picture, for me, it's bearish for pound. I don't know, what do you think, Yohay?
Yeah, I think, most recent retail sales report was actually quite positive, so that may have been an Easter effect. And April, Brits once again consumed more, but the overall trend is that the weaker pound, that is the result of Brexit, makes imports more expensive. It means British citizens are buying more essentials, food and energy, consuming more of these and less non-essentials like, I don't know, televisions, cars, things like that. So all in all, and we've seen also that real wages are negative because inflation is higher than nominal wages. And it took some time, took 6 months from the referendum. We had a strong second half of 2016, but now Brexit begins biting. Weak growth rate of 0.2, high uncertainty about Brexit. The EU is quite tough at the beginning of the negotiations. And regarding the elections, I don't think, we don't really know what Labour wants regarding the elections, but but they're more left-leaning than usual. Jeremy Corbyn is sort of a more old leftist, and markets would not like that. If we get some kind of a coalition government, if we get the Liberal Democrats in government, they're very, very much pro-Remain. That would maybe be helpful for the pound. They want a second referendum on the deal, and they want to influence to have a softer Brexit. So if they enter government, that would be good news. But it seems that Theresa May's Conservatives are going to win the elections, but with a smaller margin than expected. So she could have more trouble from her hard Brexit years.
Yeah.
So if it's more of the same of the current political arrangement, then it's not good news. Again, if she loses the majority and the Lib Dems enter coalition like with David Cameron in 2010, that's good news. If Labour wins government, it's markets won't like it on the domestic front. And regarding Brexit, we don't really know what they're standing for because they're quite divided in Brexit, similar to the Conservatives.
Yeah, it doesn't look good, the future for the pound.
No, they should have stayed in, I guess. So that belongs to history now. So
What?
That belongs to history. They had a fair vote and they decided to leave, and
yeah,
that's democracy. They made their choice.
Yeah. The Australian dollar is getting some support, mostly because stocks have fair losses and gold is pushing higher. Right, the Aussie is trading with stocks rather than with dollar strength. The yen is trading on yields rather than whatever dollar is strong or weak. Pound on Brexit and elections, and the euro, it's on its own. I guess much of the strength we are seeing in the common currency these days is because the market is much more convinced that ECB's Draghi, that tapering is needed, you know.
Yeah, I think Draghi wants to keep the euro lower and wants to talk about subdued inflation, but his colleagues are talking about tapering. And again, growth is picking up in the eurozone. Also, Q2 looks to be good, at least in the initial figures we have. And inflation is picking up, finally. Core inflation, not only oil, not only transitory effect.
Yeah. And dollar is under pressure because the market is quite disappointed about Trump promises. It seems to take it longer than expected. The tax reform, infrastructure investment, and such. All those promises we get 4 months ago are still unfilled and far away from being filled. Market is running too much ahead, too fast ahead of news. Something that did not happen 5 years ago, but these days it's the usual, right?
Yeah.
Okay, maybe seem to have satellites with the news. Yes, we will have to wait for Wall Street opening to see a bit more action.
Yeah, there is usually a correlation between stocks and dollar yen. So stocks are expected to, well, they reached new highs yesterday, S&P 500, but it could fall, expected to drop a bit today. So it could push dollar yen maybe lower.
Okay. Okay, well, I guess it's time to wrap up this.
Yeah.
To give you the honors today, Yohay, please.
Okay. So we had US GDP coming out a bit better than expected, 1.2% against 0.9. That's a revision of the original 0.7 we had. That's good news. The economy grew at a faster pace than expected. On the other hand, we had durable goods orders for April. That's the beginning of Q2.
Yeah.
They came out a bit worse than expected on the core figure, on the figure excluding the defense and the air. So the headline was a bit better, but the investment figures, the core of the core, they were worse. All in all, the dollar did react positively, more against the pound than any other currency, but the pound has already been weak, so maybe it's the path of least resistance. Movements against other majors such as the euro and the yen have been minimal, I would say, 10, 15, 20% pips. Wish we had 10%. And yeah, I guess that's it. It's going to be a long weekend in the US and the UK. There's a bank holiday in both countries. So maybe markets will be a bit sleepy on Monday, but then we have a very, very busy week next week with the build-up to the non-farm payrolls, the beginning of a new month, end-of-month flows, all that fun.
Yeah, indeed. We have payrolls next week. That will be a bit more interesting, but as you said, the week will start with the holiday. So to the usual quietness we have on Mondays, we have an extra one this one, okay? Guys, keep that in mind. Anyway, as Yohay said, that was mixed. I don't believe it's enough. It's not it's not something that will change the picture for the Fed, right? Therefore, the market has had this immediate reaction. I do think that maybe the dollar advance had a bit more to do with pound weakness right now, and the fact that the equities paired are decline and that we are heading into the weekend and we would like to take some profits out of the table rather than dollar strength coming from the headlines. Anyway, I believe that's it for today, guys, right? Hope we get more action next week. Thank you, as usual, Yohay, for being with me. Thank you.
Thank you, Valeria.
In the background. And see you soon, guys, okay?
Okay.
Thank you. Bye-bye.
Thank you. Bye-bye.